Click on that. Yeah.
All right. So
Okay.
can everyone see my screen?
Yes,
Yes.
we can.
And can you see me as well?
Yeah.
Yes.
Okay. Now I gotta, because sometimes I do double screen, so I wanna make sure. All right. Thank you everyone for giving me time and opportunity, the entire Rana family, for inviting me and do this talk. I'm not gonna be taking too long of time. I know a lot of people came with a lot of different mindset and you wanna look at fun and do different activities. So I would straight jump into what we're gonna be doing and what I'm gonna be presenting. I'll go through the slides. If the slides don't change, let me know. Or if you got a question, feel free to interrupt me. All right. So I think that you guys already talked about. So that you did my introduction. So I don't need to talk about much. But again, coming from a tech background and being in the real estate, playing a lot of marketing and tech roles, and slowly moved on into transaction space. So letting my own brand, Tall Property, for a while, and focusing on mostly investment properties. So what we're going to be doing today, I just try to give an agenda so that everybody knows what we're going to be covering. Talk about the market, what's the COVID impact, different areas, rental, resale, commercial, why pre-construction, because that's one of my favorite topics. So I would want to put some pointers there. And in the end, we're going to have some advice and some predictions, what we think going to be happening down the line. Again, a lot of things you're going to enjoy. It's all data driven, which is quite my background helps. The first thing is, and you probably, a lot of people have seen, and this has been shared and talked about. This is what the market is based on the TREB report. We all know market did pretty good in the last 3 months. Typically, summer is a slow time. People take time off, they go on vacations. There's not a lot of real estate activities, but obviously because of COVID, we saw the market hit all-time high in the month of July, August, September. I don't know, can you guys see my mouse or when I put pointers?
Yeah, we can.
Okay. So what I'm showing here is September, it's close to 12,000 transactions happen, which is compared to the last 3 years, you can see is quite a big jump. Generally, the April, May is when you see a lot of activities. And this one, the end of the big bar, this shows in 2017 when the market kind of pseudo crashed in GTA and the prices came down. So it kind of shows the activity even after COVID. The first 4, 5, 6 months, there wasn't much activity, but all of a sudden we saw a jump in the summer. Again, seeing the same thing by the numbers, we see both what's the number of sales and the average price. The condos we see is 416 area has the more condo sales, which is obvious, than the 905, where I believe a lot of our community live in 905. But yeah, the condo is active there. Regardless, the detached homes going crazy high. In 905, 1.1 million is the average price, and 416 is 1.4. It's interesting to see that the new norm is $1 million home, which is not 15 years ago when I bought my home, as we could imagine. So you got to see the newer generations is more looking at going to condo lifestyle, because that's where most of the affordability is nowadays. Again, rental is very interesting. I took the screenshot on the Breakfast Television, which talks about the condo rentals in Toronto is down by 16%. If you can see on the right, I captured this October. Let me reduce my screen. The numbers of what's the change in the rental. So Toronto is a big surprise, or I don't know, everybody kind of expected that because of pandemic, people are not looking at renting right now in downtown Toronto. So the rental rates came down quite a number in Toronto. So 1 bedrooms right now going for 19 something, which I know until last year, they were going 2,300, 2,400. Same thing for 2 bedrooms, which were touching 27, 28, is now 25 something. But some of the areas, Mississauga, surprisingly, the one bedrooms are pretty much same as Toronto, and there's not much change. But the two bedroom, there's a drop. Other areas, if you look at Brampton, we don't have the data for one bedroom, but the two bedroom is prices gone up. Interestingly, Kitchener is the prices the most grown in terms of rental, and the same thing Montreal, the price has gone up pretty nice. Hamilton as well. So some of the areas we see there's a more activity versus others don't. But in general, like Montreal, Kitchener are the two areas where the rent is growing. On a national basis, the rent is definitely not doing much as we expected. And most of the tenants now are looking for bigger units, and they're not shy away to move away from the cities, just because they feel like they can work remote and they can afford to get more space. But this is not just us. If you look at San Francisco, their rental fall by 31%. I know a lot of my friends live there and they own properties, and they have similar trend. People are moving away from bigger cities just because you probably heard a lot of companies like Google have announced that they're gonna let their employees work from home permanent. So which is a big change in these companies' strategy. Looking at the commercial, again, not a big surprise. The commercial leasing has came down significantly. This is all the TREP data which you're seeing. The activity which we have seen last year versus now, you can see the year over year, the leasing activity is down, and also the per square foot. The office space specifically, you can see. The commercial is not that much impacted, but the office is definitely big impact. And I can see my wife work for TD, and they probably not going to be going back to work anytime soon. Same thing in the condo. Condo is actually very interesting. People expected that the condos would be crashing down and the prices would be hitting rock bottom or something like that, but nothing like that happened. The condo prices, on an average, you see still going up. It's the number of transactions which is down. So if we sold 7,000 last year, comparatively they're 3,500 now. So it's almost 50% down, what you're seeing here in the charts. Same thing, another interesting area where people want to see is the job market is we saw a big drop when the pandemic hit, but now we're kind of on a good trajectory of return. So we are around 70% back to the recovery rate. I'm showing all these data because it just kind of helps build the story, and we all can put our view around seeing all these things where we are heading. But I don't want you to confuse these short-term challenges with the long-term opportunity, especially when you look at the real estate investment. The tech market is very much growing in Canada. We are one of the second biggest employers where the jobs are being added, which is good. Like if you see, in the past, there's a lot of blue-collar related jobs and people immigrated from all different professions. But now there's a trend and more educated professionals are coming in the area which is growing in Canada, especially around the Tri-City area. The news which I have captured from Globe and Mail talks about the whole Kitchener, Waterloo, and Cambridge is one of the areas where we see the rent is growing, the companies are setting up offices there, and the pictures of the Google office down below. And same thing, the commercial activities is doing pretty well there. Again, here I'm talking about the benefits of why you should be considering pre-construction as one of your options if you're looking into real estate investment. And on the right, there's a chart which talks about where the Canadian investors want to invest their money. This is a survey again done by RBC and captured based on what people are looking at. Where should they buy their property? And they are more focused on where the new development is. So when we look at pre-construction, and I got tons of properties and I did not tons of, like a couple of them, but I enjoy doing pre-construction because it gives me a good cash flow. I can have deposits structured, extended for a longer period. I'm not really right away. I have to come up with $500,000 or plus or something to buy investment property. And so one of the big benefit I see is the pricing and the extended deposit, which you can see 4 or 5 years horizon. When you buy a condo, you will see the return. As the market appreciates over the time, you will take the benefit of the return. There is the maintenance wise, I always find it better. We all like the new properties. We know that you don't have to worry about the breaking and stuff, which is what builders cover. And that's one big benefit. Taxes is one another area where you can get 50% tax on the capital gain, which is, again, this is a topic quite in conversation in the government offices or the governments are looking at how to change or if there would be a change. But again, as of today, it's 50% capital gain. And again, it gives you all the customization and other abilities. Sharing another interesting fact that Toronto is the king of cranes. I don't know if all of you know, but we got 121 cranes. If we include Mississauga and everything, 246, which is probably the highest in North America. So we got more cranes, which shows that there is a reason, there is more things we're building because we see that there is a growth expected here. This is again a September 1st data published by Conference Board of Canada. It shows what the immigration or migration you're looking at. If you look at Toronto, we are looking close to close to 2 million people going to be added internationally, if you can see. It's not intercity, there would be, but if you look at international, like that's crazy number to see 2 million people projected to come to our suburb. And you can see it compared to Vancouver or Montreal or other cities. Same, the mortgage rate is a big factor for investors. Right now, the borrowing is all-time low. I know the last time it was low in 2008 or 9, when I was paying my mortgage was less than 1%. But now we are close to 1.6, 1.7. People are getting a fixed mortgage for 5 years term, which is pretty good to borrow money and even leverage and do something else. Looking at the trends, again, right now people have more borrowing and more buying power. There's a stronger market. The listings are moving faster compared to what they were doing in the past. There is, again, as a trend, people see rentability is getting a lot more affordable. In a way, there's a relief in the rental market. And somehow the whole communities, everybody's adjusting to COVID-19. Like our real estate in my industry, people are now buying over the phone, over the Zoom meetings. The projects are being launched over the Zoom, and people just see the presentation and somehow booking and buying condos and real estate over the phone, which is the new normal. Now, I'm going to be ending now in the last 2 slides with some of the advice and what I see. If any of you want to add more real estate to your portfolio, again, don't just concentrate in Toronto. You should try to scatter. As you can see, the markets react differently in Toronto versus in Mississauga versus in Kitchener versus in Whitby, Oshawa, Ottawa. There's a lot of areas we should be considering. Again, there could be at times, like I bought a condo 5 years ago and it closed like 2 months ago. Not the best time for me to close it, and I was holding on to it. I had to hold on to it for a while before it got rented out. So you never know. So you should have that strategy in your mind that there would be, it might going to be vacant for long, and there would be legal closing, different costs. So just make sure you have all those things crunched and planned. And again, work with professionals. I think they can help you with making the right decision. That's why people choose their profession and bring the expertise and value. So hire the right accountant, advisors in real estate or mortgage business. Again, some of the predictions we talked about, and it aligns with what I have shown earlier. As when the borders open up, there is going to be tons of immigrants. I know a lot of people who are holding on to not come in the country, whether they come on a student permit or they want to bring their family. I'm myself considering, my brother, he want to come here because somehow after 20 years of me being here, he feel like now is the time for him to come here because he's finding it difficult to do business back home or do things what he used to do. And giving an example, my son is 18. When he's going to be 25, I got to see where does he want to live. Would he like to live in Woodstock versus downtown Toronto? I think he's going to be living in downtown Toronto, but again, we all got to make some calculated investments. I expect Toronto prices continue to grow in the next 10 years. And there would be short-term fluctuations, there might be declines, but if you look at the long-term mindset, then and you work with the right set of people, you will see the benefit of your risk. Yep, I think I tried to hit the 15-minute mark. I might have spoken fast, but yeah, opening up for questions.
Okay, so I'll ask the first one.
Yes, please.
So I've had some conversations with people who've sold their properties around this time in the last couple of months. And they've been saying that even though they get a lot of showings, like they've got like over 10 showings in a week, but everybody's trying to lowball. So what is your experience on this? Like they're able to sell it fast. Like there's a lot of interest that people are doing, but the prices aren't really, like there's not a real bidding war that you would expect from like multiple offers. Like there are multiple offers that are coming in, but they're all coming in at quite a lower rate than the asking price.
Right, and this is, again, how you work with the right professional or agent, because everybody is kind of on one hand thinking that the market is going to go down anytime. The COVID has an impact and people do feel like the prices should be going down. But obviously there are buyers in the market. There are people who are looking to upgrade or they've been holding on to the cash to buy property. So it's very natural. The first hunch is if I am going out, I can show you all the data is like, guys, this is the average price property being sold. But you being my client, you're going to like, hey, पहले सस्ता try करते हैं, हो सकता है वो मान जाए, ठीक है? So that's always the mindset is try low and maybe after the one or two offers, that that's not going to fly by. The guy who's selling knows their agent did the same homework, showed them exact what sold in the past, what's the price should be selling at. So it's more people mindset you play with, but in reality, the prices what people are fetching is quite competitive in the market, and it's not lowball are rarely working. Like right now, we think that people are going bankrupt and selling their properties, but that's not happening.
That's because of the government support that we're getting, unlike the way it's going in the US. Quite different. The market's quite different over here compared to there.
It is. The people have still the government's money, and I don't think it's going to be happening if the lowball or the market going to crash. You got to wait. If the COVID has to run another 6-8 months, then we would start to see the impact on people's affordability, and they would be going bankrupt or stuff like that.
Okay. Anybody else has questions?